Good morning, happy July 5th, and we're going to be talking to Dr. Professor Peter Ricchuiti of Freeman Business School at Tulane University. Good morning. Do you mind if I call you Peter?
Absolutely. Can I call you Steve?
Yeah, please do. Absolutely, absolutely. So, um, what the heck is going on right now? Let's talk about the U.S. economy, since you and I just briefly talked about that in terms of being kind of crazy. So, what the heck is going on?
Well, there's a lot of confusion. I think a lot of corporations are holding back that money that they just got for the tax cuts because they want to see what's really going to go on with these tariffs and trade wars. I've been doing this 40 years. I've always been a free markets guy, and I think tariffs and trade wars are prosperity killers. And the interesting thing is nobody's more at risk than the state of Louisiana. We have the South Louisiana is the nation's largest port by tonnage, and we're really as more vulnerable than anyone else at this point.
Okay, so we'll talk about the tariffs and all that in a few minutes, but let's just talk about the economy. Obviously, the economy is it's booming. So, what's causing that, from your
Well,
view?
it's been interesting, Steve. This has been the second longest economic expansion in history for the U.S. We've been, let's see, if you look at it, it was 90 months of expansion under President Obama, and let's see, there's 16 under President Trump. So altogether, 106 months of expansion without a recession. A recession's 2 months in a row with negative growth, and so the longest is 120. So this is it's very good, but I think a lot of economists are saying it's getting long in the tooth. One of the things I hear, I talk to corporations through our Brick and Road Reports program. I have a radio show on NPR, talk to business people all the time. The one question I ask in every interview is, what's keeping you up at night? And it's the same answer for every single one, and that is find available labor. They think that's the constriction. We're below 4%. 5% unemployment is thought to be full employment. So we're at levels we haven't seen in 50 years. And when you pack that into the restrictions on immigration, you really get yourself a restriction on how much further you can go.
Okay, so um, the economy is has been rebounding then under Obama and then Trump. There's a big debate going on in terms of who should get credit. My feeling is that they both should get credit, but neither one seems to want to give the other credit. I mean,
Very much. I've never seen this kind of partisan politics.
so I mean, what happened when Trump took over, or at least when he after he won? What
you,
what
you had
happened?
a you had a big run up in the stock market. You had a feeling that this was going to be a pro business administration, and that really cheered investors. For that first year after the election, the market was up about 23%. And it's starting to cool because what we've seen is we basically had a 1% rate of return since the first of the year. And that's because these restrictions are starting to hit businesses. They're starting to see that. Now, the tax cut definitely was a boost. That's why the market did so well, I think, is the tax cut to corporations. And, that's sort of baked in the cake now. And there's Wall Street's sort of saying, what else have you got for me here? And the odd thing about the tariffs, Steve, and the potential trade wars is they seem to be hurting or potentially hurting the states where Trump did best. If you look at obviously Louisiana, then you look at people in agriculture. They're about to really take quite a hit in here. So that seems odd from a political point of view.
Yeah, yeah. Okay, so getting back to Trump and basically there was a lot of optimism in terms of the tax cut coming and the deregulation.
Right.
He started with the deregulation first and then the tax cuts. Um, or the tax cuts, I mean, he also said that he wasn't going to allow any of his friends or, I guess, family to get the benefit, but they have. Am I correct?
I think it's certainly more involved business-wise than I can ever remember an administration having their family involved in there. One other thing that's, of course, very, very important in Louisiana is oil prices. And oil prices have basically went from 114 to $28 a barrel at the worst point, and now we're over 70. First of all, it's going to help the state's budget. For every dollar the price of oil moves, it's a $13 million change to the budget. I was the assistant state treasurer for
Right.
almost years, and so that's a very big deal. But it's kind of curious because the part of the oil field that's doing very, very well, and really the only part, is these shale fields in West Texas. I brought 5 of my students there about several months ago, and it's just booming. They can't find enough people, but their break even there is about $30, $35 a barrel. Whereas here, particularly offshore, which is really what counts in Louisiana, the break evens are much higher. So one anecdotal piece I'd like to share with you, Steve, is
Sure.
I travel all the time, and I'm starting to see a few more people with hard hats attached to their luggage in the airport, which indicates somebody's going back to work out there. But so far, we haven't really seen much improvement, and yet the flip side of those higher oil prices, that gasoline prices have gone up about 50 cents in the last year. So in some ways, we're getting a little bit of the bad part, and not too much of the good part of higher oil prices.
Okay, if anybody has a question or want to make a comment, please go ahead and jump in. We'll do our best to have the good professor to respond to your question and comment. So oil prices actually have improved. What is it right now? The last that you looked,
Somewhere between $70 and $75, and but the thing is, people don't have much confidence that those prices are going to stick. And if you're an oil company, I mean, what they do offshore is just an engineering marvel. They're between the time they bid on that water bottom from the federal government and the time they actually get oil to the refinery can be up to about 4 years. So if you're drilling now, you've got to have a lot of faith in where oil prices are going to be down the road, a long way down the road. And because you're spending, $1 billion out there. And so I think that's what's made people hesitant. And of course, the shale fields seem unlimited. Of course, we went over there and you visit with Texans, and Texans are always very optimistic. One of the great oxymorons is humble Texas. But they're telling us, they've got zillions of years worth of shale oil out there, and that's one of the things that's happening. Every time the price moves up, more shale is produced because it becomes so much more lucrative, and that in turn pushes the prices down. So you have this very odd, what would work, of course, is if the shale producers got together and decided, how much oil they were going to produce, but that's really illegal. That's what it is. Yes, you can't have a cartel in the United States. So, but that's kind of where we stand. But you go to places like Houma and Lafayette, driving through there a lot, and that's still pretty sad. See all that equipment just laying around there.
So do you expect the Louisiana economy to improve? I mean, I know that it's very speculative. I understand that, but I mean, the governor's getting hit for a very poor economy. I think I believe is the last that I saw.
And we do finish at the bottom of every single poll, except for percentage of people incarcerated. We're very, very high on that one. But and what they're looking at is education, workforce, and we've got a long way to catch up in those areas. So when you look at the Louisiana economy, it's always very volatile according to trade and oil prices and such. But what we need is a stable economy that isn't, tied to such volatile indices. And we'll have to see where it all goes. I'm glad I'm here.
Oh yeah, and we're glad that you're here too. I mean, absolutely, and you've won awards over at Tulane for top professor at the business school, so they're glad you're there too. But we have an election coming up, and some people are not glad that the governor is the governor, and they blame him for the bad economy.
I think that's really hard to do because he inherited just an enormous deficit that Jindal got us into, and he's got a legislature that's been very kind of on that no tax, no time kind of piece. And I don't even know if that's really statesmanship, and I don't know if it's financially responsible. You know, you've got a situation, and you have to balance the budget. I think the increase in the sales tax is difficult because it is a very regressive tax. It tends to hurt the poor more than the rich. And in fact, that's when you look at the national tax cut that just came through. That was odd too, because if you wanted to stimulate the economy, which is, you know, ostensibly what they want to do, you would give the tax cut to the middle class, because the middle class will spend 100 cents of that dollar, and the wealthy will spend a little bit,
Right.
and you know, and save the rest of it. And you know, because one of the things that people get wrong over the last 30 years or so, I think they've been skewed this way, but the idea that rich people are the job creators, and it's really not true. The rich people certainly help, but it's the middle class consumer that's the job creator. I mean, demand creates supply. Supply doesn't create demand. So, you know, it's but you know, economics is not a strong suit in this country. You know, they asked. I saw a funny poll once. They asked people what the Federal Reserve was. Some thought it was an Indian reservation. Some thought it was a brand of whiskey. You know, it's
It's both. Yeah.
both. That's what it is. It's
Yeah. So let's see. I'm looking at a comment, actually a question. Can Peter elaborate a little on who the tariff is hurting and what the people are saying who it's hurting? I haven't heard of unreasonable complaints. We all know we have to suffer briefly until the playing field is more level. And he says, does he agree that once more in-house manufacturing is available, then it's beneficial for long term? So there's three questions there. So let's start with the first one. Who is the tariff actually hurting at this point? And do you expect to hurt? And we're talking about Louisiana. So,
yeah, well, you look. Let's take an example. The best example is the steel and aluminum tariffs that have come in. It's helping you if you're producing steel. If you're making things with steel, it's killing you. The same thing with aluminum. We have very few smelters in the United States. In fact, 98% of, if you look at the American Aluminum Association, 98% of the members are people that use aluminum. You know, and so it's helping it's hurting a bigger group than it's helping. And I just think that's really, really curious. So, and one of the things people don't get is there's two things people get. They think that we're not manufacturing anything in the United States. That's a big thing to say in bar rooms and things like that. But we're manufacturing more than we ever have in the United States, but we're doing it with far fewer people,
right.
Much more efficient. And that's not going to reverse. There's just no way. Nobody's going to sign up for that. In fact, if you look at the capital expenditures, U.S. companies have been, you know, they've received a lot of breaks. They're earning tons of money, but they're not spending a lot. So in some ways, they're using the money to buy back shares, do a lot of mergers and acquisitions. So in some sense, I think we're eating our feed corn. We're not really planning for the future. But this is the problem on the manufacturing. If you look at the money that's being spent right now for capital expenditures, almost all of it is going towards things, materials, machines that will improve productivity. And there's two reasons for that. One is, you know, that certainly makes sense, but the other is corporations are looking at the situation and they don't have any workers left. And the only way to kind of combat that is to create machinery and everything else that'll be able to do it with fewer workers. So, you know, I just don't see the manufacturing base. I see more production, but I don't see a lot more people being hired. And you see that offshore too, Steve. You know, 30, 40 years ago, there were a lot of people that, you know, did a lot of kind of brawn kind of jobs out there. And now, you know, these are the most sophisticated technology people I've ever seen in my life. So it's difficult. We'll have to see where this shakes out.
You know, for an example, in New Orleans, in Port of Louisiana, et cetera, I mean, you have these ports that are basically automated. I mean, I remember the longshoremen. What happened to them?
Yeah, oh, isn't that the truth? My grandfather was a longshoreman up in Boston, and that job wouldn't really exist. And that's the way the ports compete against each other. And I just it's not going to change. It's only going to move in one direction. So the people that are kind of hoping for that guy carrying the lunchbox to go to the steel mill is just a fantasy. And I would argue we're doing better now. It's funny, Steve. I go around the country and give speeches, and some people, I'm gonna say, mainly older people, tell you it's not like it was. It was great before, And
Mhm.
but the truth of the matter is, we're doing better. Almost everybody is doing better than they were, 30 years ago. So I don't know if it's nostalgia or what it is. That was a big thing in the presidential election.
Right.
Push things back the way they were, and you can't put the genie back in the bottle. We are a world economy, and that's what it's going to be. And the other thing I think people don't get that are against it is that it's not a zero-sum game. If just because these other nations are doing well doesn't mean that they're taking it away from us. And I think that's one of the big things we have to explain to people.
Okay. So let me just throw this out. I mean, obviously, there are people, particularly the president, who says that that there's no level playing field. That they're being unfair. Canada is being unfair with tariffs. England, Germany, the auto industry, China, obviously, and so the only way to be able to balance the field, to level it, is through tariffs, our own tariffs.
And one of the problems there is, the president said these trade wars are easy to win,
Mm-hmm.
and they've never been easy to win. I don't know where that comes from. You've got a lot of anti-American feelings around the country since the election. I mean, around the
Right.
world, and I don't see them giving in. I think they really want to hold their own here. And the one thing that does, I don't know about the level playing field and all that. I've never really spent a lot of time with that. But the one thing is the pirating technology
Mm-hmm.
by the Chinese. That is a huge deal. And but the interesting thing with this immigration is that there's a lot of anti-immigrant feelings. But you look around, and at the low end, we need these folks. I mean, if you look at the people that are picking fruit and vegetables, I mean, Americans aren't going to do that job. I keep thinking if they really do throw everybody out, you're going to pay $45 for a salad. And the flip side of that is the students I have here at Tulane, which are foreign students, of course, usually the best students in the class, and they are getting nixed in terms of getting jobs in places where we really need smart people, like Silicon Valley, medical research, financial services. So there is no middle. It just seems like it's a very high end or very low end. And so I just don't see it being a problem. And plus, we've been a nation of immigrants from day one. When the Italians came, that was
Mm-hmm.
my family. They weren't crazy about us.
Right.
It's
Right.
why
Right.
don't
Now, I certainly understand it. You said that some foreign students are being nixed over. Is that what
yeah,
you're saying?
it's getting harder and harder to get that H-1B
Okay.
visa, and that's what they've always come in on, and usually work a few years, show how well they can do, and then get some sort of approval to get citizenship. But the doors are blocking on a lot of these things, and you talk to people like out in Silicon Valley or the financial service, and they're furious. They just can't get enough American people to do these jobs or could do these jobs. And then the flip side, I mentioned like picking fruit and vegetables. I was giving a speech the other day out in San Diego, and I said, if you really want to nix immigration, we could all take a break at 11 o'clock to clean our own hotel rooms. It's just a lot of things that are going on just go against standard economic understanding. So maybe he's right, maybe he's not.
So, in terms of employment, are there enough jobs out there for the people who need the jobs right now? I mean, I understand we're at almost zero unemployment.
I think if you look at the people that are unemployed now, it is either a skills mismatch, which is obviously, or a geographic mismatch. And so you've got people, I think probably you and I, most of the people listening have changed cities to move the career up. And so there's people that just aren't going to, they're not going to move the Amazon headquarters to Hazard, Kentucky. It's just not going to happen. And I'm not picking on Hazard, Kentucky as an example, but so I think it's the best thing the United States could do with money right now is to retool the worker. And because that's really what counts in here. And there's this feeling, Steve, that you get where people say, well, that's not really true, the sub 4% unemployment, because we have all these, the percentage of people working isn't very high, but that's really kind of a crazy number. Usually the party out of power uses that
Right.
but it's it includes students, and I think we should all hope they keep getting into training, people at home managing families, the people that have a physical infirmity. They are not coming back in the workforce.
Right.
In fact, that number, about 82% is in the workforce. That number's actually going to just get lower and lower as the baby boomers retire. So it's and I once had a slide about that in a presentation. I decided the title would be "Get Up, Grandpa," and it's just not going to happen. So, Steve, if you had a one term you'd give an economist about what is a key metric to looking at an economy that's going to get stronger, it's the population of working age people. That is, I know we've got 100 different metrics, but that's really it. In fact, when you look at countries, we're going up, which is positive, not very quickly, and it's almost all because of immigration. But you look at countries like Italy, Japan, where their population keeps aging and people aren't moving there. I mean, that's the death knell to an economy.
Mm-hmm.
You need these folks in here.
Interesting. So Tim Allen Matthews says, but how come my next door neighbor has to sell something 3 times higher to make a profit than China sending across an ocean for cheaper?
Well, first of all, it's going to get worse, because now if he's making something in steel or aluminum or any of those costs, he's going to have to pay more to make it, and he's going to have to sell it for a higher level. We're just going to have to, we get to the point, Steve, where there's some things we do very, very well, and some things can be done very cheaply. Like, we are not going to make Christmas ornaments in the United States anymore. That's an example. That's ridiculous. But we have all the breakthroughs in technology, and I'd rather be in our position than a position where everything was a commodity. You don't want to get into a commodity business. You want to get into value-added businesses, which is one of the things Louisiana has always been a little bit off on. We have all these chemical plants, for instance, but the people that make like pool supplies, the chlorine is on that. Those chemicals are going abroad to be for the value-added production, and so I think Louisiana is a great microcosm of that exact situation.
What is the reason that they're going across seas to China and Asia? I'm a big fan of Shark Tank.
Yeah.
Watch it as often as I can. I've seen some of the some of the programs 5-10 times. Know exactly what's going to happen, but they always are talking. Okay, well, shipping over to China, manufacturer to China. So is it the labor cost? I mean, is that the bottom line, that the labor cost is just so low in these underdeveloped and countries like China, which is not really underdeveloped now, that we just can't compete?
You got it. It's almost all labor costs, and because we have better resources than they do, physical resources. And I don't know, you look at those labor costs, and one of the reasons China's been able to do it is they had all these people in rural China, and little by little they're moving them into the city to be workers. But the funny part is China's now nervous about countries that are less developed than themselves being able to outprice them. You look at, for instance, I'm originally from Boston, and we were the head for textiles for many, many years. All those mills that were up in Massachusetts. And then the South came in, and they had lower cost production because they were non-union and cheaper places to live. And so we lost all of that textile to the South. And then the next wave was we lost all of it to both the Caribbean and China. So it's this idea of going to the cheaper labor has been around forever.
Okay, so now it just happens to be Asia, and I would imagine that pretty soon it'd be Africa.
Yeah, I think that would be a good bet. And we do. I started a program 25 years ago called Birkenroad Reports. You
Right.
can go to birkenroad.org. The students write investment research reports on companies in the South, and had great luck. We've sent 750 students off to the investment world, and that's been great. But we were visiting a company that makes sportswear, and this was a perfect example that most people, I wouldn't have got it unless I had the tour. Is in the back door they had cotton coming in, bales of cotton, and then the next step there, they were turning it into fabric. And then the third step is that they were cutting the fabric into what it's got to be, a shirt or something like that. Those were all done in the United States because they didn't require a lot of labor. Then after all that, they get shipped in a big box to the Caribbean where they're sewn. And that is a labor-intensive part of this. And then when that's done, the box comes back to the United States and it's sold here. So to give you an example, so not everything is outsourced. It's just the labor-sensitive parts of the curve.
Okay, I'm going to see if I can at this point get a tweet. Okay, there it is. So I'm going to put it up. Unfortunately, you can't see it, but I will go ahead and
You
read
are
it.
Mr. Technology, Steve.
Yeah, I tell you, like I said, Al Gore has nothing on me. I taught him everything he knows. So, okay, so this is from the Hill. U.S. pig farmers warn that they'll be the casualty of the next round of retaliatory tariffs prompted by the president. So they're not very piggish on the tariffs, it looks like.
Yeah, and this is another example of where the states that are seeming to schedule to take the big hits were really Trump supporting states. So it is kind of is a little bit odd. But yeah, you look back, Steve, every time there's a problem with somebody expelling diplomats, anything, the first thing to be used as the pawn is food. It's always been the case. And whether you're a chicken processing company and we've had a spat with Russia, they're not going to buy our chicken, and then the soybeans and all that, and that's what made two things there. You could say, well, that's the middle of the country, that's not us, but all that has just come down the river. So we're affected really more than the pig farmer themselves, because it's what's coming through. I was running by the Fly yesterday, and it's obviously the cutbacks haven't occurred yet, but it's a marvel, really, to see all those ships going back and forth, and we're the focus point of it all. And
Sure.
yeah, and of course we're competing with other ports, and we keep trying hard. And I think the thing about the port is that because there's that big wall, nobody ever sees the port. And if they really saw it, like you get a little break like the Fly and you can see the ships come up. But if people saw it day to day, I think they would understand better about how trade is so important in Louisiana.
So, okay, other than the ports, who else is going to be hurt, assuming that the trade wars, are not solved as easy as the president says that they will be?
It's people that it's very funny. Like, for instance, I'll give you an idea of a stock that has taken a real
Okay.
wall here. Is Thor Industries. They're a company that make those Airstream trailers, those very cool, nostalgic trailers. Well, they make those things out of aluminum, and stock is in the last, it's dropped about 20%, 30%, because they see those costs coming up. And so a lot of times it's not what you think. I think, like, when I think of steel, I think of, well, first of all, I think of the movie Flashdance with Jennifer Beals is what I really think of. But it's it's really visual, and you can see the sparks flying and all
Right.
that. But the many more people are in the fabrication side of steel, and they're getting clobbered in here. In fact, their export markets are just going to completely dry up. I mean, if you add, if the Europeans put tariffs on products coming out, or we're using, here's the key example, that steel and aluminum, we don't make enough of it here to satisfy the manufacturers. So they're all gonna, at some point, even if steel built more plants than aluminum, we're still going to be buying imported steel and aluminum. So it's not a matter of let's just keep it in America. I really can't believe what's going on, to be honest with Steve. 10 years ago, I would be giving a speech and I would say that, we'll put a wall around the United States and we'll drive our own cars and eat our own corn. And I just used to say that as jokingly.
Mhm.
And now it's happening. And so I really, we'll have to see where this goes. Excellent time to be Excellent time to be studying economics, though. There's a plus.
Yeah, and politics.
Yeah, and politics, right?
International politics. You know, which really kind of gets me. I mean, you know, the Canadians now, at least I've read at least one article where, actually two, where they are refusing, some or at least are refusing to buy any products from the United States. I mean, they're rallying behind the flag, and so that certainly doesn't help. I mean, in terms of food, in terms of, I mean, they, somebody went grocery shopping in the article I read, and they said, "Hey, look, every product I have is now Canadian. I don't care. I don't want to deal with American products." So that's one thing. And another thing is you have going on. You have right now the United States at war, in a sense, with all of our allies.
Right.
So how can we use
Go it
that
alone
against China, where we definitely have a gripe against?
Right, but the allies that we've been with solidly since World War II at least, it just seems odd. Like for instance the auto tariffs that they're talking about. Well, life is not like it was in the 1970s. That's the way seems like we're
Right.
operating. Like it's like no more BMWs. It's like, oh, I don't know how to bring this up to you, but they're made in South Carolina. There's and then any car that's manufactured here, well, the parts are coming in from all over the world. It's not simple anymore.
Yeah.
Yeah.
Yeah. So we had Jay LaPere,
Great
from,
guy.
yeah, and we had him on, and basically what he said was, from his standpoint, it's the uncertainty. I mean, you got to plan in the future. You have no idea what's going on. You're not sure if that component part, that he needs for his machines are going to be available at all. And so it is, it's what's freezing
Yeah.
his
You
growth.
would too, Steve. If that was your situation, you'd be sitting on your hands as well. And then you've got this tax cut and you've got all this money. And so one of the things that's happened in corporate America is, if you get the opportunity, let's say you want to build a new distribution facility in South Florida, such, and that could work out, it might not work out. But if you're management and the board, you've got that option versus let's just buy back some of our own stock.
Right.
We'll increase earnings per share, it'll increase the share price. And frankly, by law, their obligation is to shareholders. And so it's tough. It's tough to beat like a lead pipe cinch, like buying back their own stock. One of the things, Steve, that's driven the market so high over the last 20 years or so is that in 2000 there was 6,600 publicly traded companies in America, and now there's 3,300 publicly traded companies, and the companies that are there are buying back their stocks. So it is really just supply and demand. You've got more money chasing fewer shares, which is right in the intro part of the economics book. And so it's very curious. And of course, we've had a great rally. We're up 300% since the spring of '09. This has really been the greatest rally in the history of the free world. And
Really?
the reason I'm suspect, though, is for the long time of the first 8 years of the recovery, investors weren't buying into it. And then, of course, they missed a tremendous opportunity. But now there's so much enthusiasm for buying stocks, and there's so much complacency on the part of investors. And you've got very, very low unemployment rates. There's no slack in the economy. Usually when everybody's optimistic, that's the time to be bearish. And when everybody's bearish is a good time to be optimistic. Warren Buffett famously said, be greedy when others are scared, and be scared when others are greedy. And so on a market basis, and one of the problems investors have is the stock market is about 6 to 9 months ahead of the economy. So a lot of people say, all right, I'll keep an eye on it. When we go into a recession, I'll sell my shares. And it's like, well, actually, that'd be too late. And the other thing that's happening is short-term rates are going up a bit. So sitting in cash, not exciting, and it's not very lucrative, but you do make something now. Before you got zero.
Right.
So that's become an interesting option. And
so what about the repatriation of all the $3 trillion that? I mean, is it coming back? Do you know?
It is coming back, but where's it gonna go? And is it gonna go to where it's been going for 8 years, which is stockpiling cash, buying each other, and or buying shares back, and none of those create jobs. In fact, you could argue that M&A eats up jobs, because when two companies merge, there's duplicate positions and such. So you need real expansion, you need real capital expenditures, and just we're seeing more of it, but not to the levels where people were talking about with the tax cut. And I think it's exactly what Jay Lapierre said. It's uncertainty. It just seems irresponsible or really scary to embark on a big spending program when you just don't know what's around the corner. It's really the same exact example that we had with the oil industry. You go out and spend $1 billion for a well, and 4 years from now, nobody could tell you where oil price is going to be. By the way, back to the oil industry, one of the things that I guess a lot of people in Louisiana and Texas and all this, they think that renewable fuels are kind of like a bunch of hippies in California, and they're not. It is coming, and 1% of the fleet is now electric cars. When it gets to about 2%, it's believed that's the tipping point, and that's when you're going to really start to see, like, I was giving a speech in Texas about a month ago, and a guy came up to me afterwards, and he goes, "Yeah, get electric cars. Where are you going to fuel them? Whole Food?" And of course
that's a good idea.
That's right.
Yeah.
But that's the way capitalism works. You're going to get enough electric cars where you're going to go to bed on Tuesday night with no chargers, and you're going to wake up Wednesday morning. It's going to be one on every street corner. So it's real. In fact, the CEO of Shell came out a couple of months ago, and he said that demand for oil would start to fall off in about 10 to 12 years. So when you think about what he's saying there, not the demand for energy, which is, you can imagine where it's going, but the part of the pie that's oil is going to be smaller. And interestingly enough, it is natural gas natural gas and renewables that are going to fill that gap. And we are kind of mecca of natural gas here in Louisiana. And I don't know if you've talked about it on other shows, Steve, but the most amazing thing going on in Louisiana, I think the most amazing thing going on in the country, is these LNG facilities that are being built in Lake Charles and Cameron. And this is just incredible. They have spent $50 billion building this out. That's the most expensive private project in the history of the country. And they're taking this natural gas, which we keep finding more of as we're drilling for oil. They come on down on these pipelines to Lake Charles. Lake Charles, they take them and freeze that natural gas beyond freezing, and drop it to 265 degrees below zero. And it shrinks to 1/600th of its size.
Wow.
They load them on these ships, and they send them abroad. And it's arbitrage, because gas here, we have so much of it, we don't know where to put it, is below $3 a thousand cubic feet, but it's $6 in Europe and $10 in Asia. So you can do all that and still make a good profit. It's very, very interesting. And so those areas are just boom towns now. You could argue that another one of those examples where you get a lot of workers now because they're building it out, and then when it's done, maybe there doesn't require very many people to run that. But that's the most exciting thing going on in energy, and it's right here in the state.
So are you saying that you think that the president is making a mistake to emphasize coal and oil as he has, and maybe to focus in on the green stuff instead?
Oh yeah, I mean, that's where the future is. There's more jobs in renewable energy than there is. Coal is a very interesting thing. There's 76,000 people who work in the coal industry. Give an example. That's the same number of people that are employed by Arby's. So it just it seems crazy. It's just looking at it logically, and logic eventually wins out. It's dirtier and more expensive than natural gas. I mean, how is it going to win unless they put some sort of crazy tax on natural gas? But natural gas is the bridge fuel, and we're in the sweet spot between where we are right now and renewables. And it's going to go a long, long time. I can't imagine being in a better spot than they are. The coal thing, I just don't get it. Nobody believes in coal. I saw this is the funniest picture I've ever seen. I wish I could show it to you, but the Kentucky Coal Museum is actually now powered by solar. So I think that kind of says it all.
Really?
I think
Wow, that's a big wow.
Yeah.
Really. So all that coal being sent over to China, though. I mean, didn't the president make a deal? Yeah.
But the thing is, over in China is, that's the thing about not being a democracy and the system is, they're starting to really worry about how much pollution they've got over there. We send our students go on 4 international trips a year. And some of them love the China trip, but some of them, you know, they have to wear masks and everything over there. And China, I think, is starting to work on, hey, we're not going to do coal anymore. And you know, we can't do that in the U.S., but they can just a proclamation, and that's it. The pollution is so bad over there.
Right, right,
And
right.
I don't.
Yeah. So one last question. Look, I could listen to you, you know, for the entire day for sure, and night. Unfortunately, I don't want to take any more of your time. So, one last question. The World Trade Organization. I don't know if it's rumor but you know, I'm sure you read the story about Donald Trump at least preparing for some legislation that may yank us out of the WTO. And the article I read was, "Whoa, you don't want to do that."
These are all crazy, you know, the idea, you know, maybe we'll leave NATO
Yeah,
and the WTO. This is crazy. We're stronger together than we are apart. It just doesn't make any sense. And, you know, the reason the economy is so strong right now is that finally, and this has been the first time in 20 years, our economy is strong, and so is Europe, so is China. So everything is synchronized. And that's what's making this big deal. You don't want to hurt your trading
right,
partner because they're buying you stuff.
right, exactly. Yeah, I definitely agree, but the president's not listening to me. So,
Oh, I'm sure he listens to this all the time. I'm sure he's one of your listeners.
well, I don't think so. He and I are not getting along right now. You know, I don't know what to say. But
Once you and Al Gore started this thing, you know, we knew it was going to work out, this whole internet thing.
well, that is working. That actually is working. Unfortunately, some of the tech people don't want to come to America right now.
Yeah, I mean, that's what I worry about. If you take like our top students and you don't allow them to work in the United States, you know, they're going to go back to their home countries and start businesses. And I don't want that. I don't think any of us want that, and we
Right,
don't want to compete against them. And you know, 40% of the Fortune 500 were created by immigrants or their children. And that's the thing
right.
people don't get. I mean, they're harder. They're very hardworking. They're very smart. They're exactly who you want.
Amazing, amazing. I did say one last question, but I cheated myself. Okay, so here it is, the very last question, and that is Harley Davidson. I mean, what is going on with that? And isn't there sort of a sense of inconsistency from the standpoint that the president needs to stop manufacturing his ties and everything else and his daughter's stuff elsewhere? I mean, it just seems odd that he's against Harley
We're
having to
just
move,
great
but he
Americans.
hasn't moved his stuff.
Yeah, it's and the other thing is, I guess I'm just sensitive because as an investor and what I teach, it's so odd to have somebody like the president come out against publicly traded companies. I mean,
Yeah,
this is a big deal. This affects everyone. And but I can see if Europe put up those tariffs, they would have a very difficult time competing. And so they would have to move manufacturing over there, and then, you know, kind of being berated as being unpatriotic for not
that's
staying in
right.
the United States. I mean, these, once again, their obligation is to shareholders,
Right.
and that's what it's all about. And you know, one time, you know, we'll have a topic sometime, Steve, is the bigger question that comes up at business schools all the time now is, are companies beholden to just shareholders, or is it stakeholders? It's, which could be your employees, the community, your suppliers, you know, your customers. And I think that'll be the big macro question over the next 10 years.
Well, legally, I think it's going to be shareholders still. I
Yeah.
mean, yeah, absolutely. Well, listen, I'm going to be responsible to you. I did. I think we're about 14 minutes over.
Well, I've certainly enjoyed this, Steve.
Yeah, yeah. I absolutely have. So your radio show is
Right. It's you know, it airs Thursday at 1 on NPR WWNO, and then again at 6:30 on Friday. But the best place is to maybe if you happen to be in the car, which is really most people. But if you go to www.itsneworleans.com, you can listen to all 550 of our former guests. And Steve, I'm not just saying this. we created the show when New Orleans was starting to be recognized as one of the top places for young entrepreneurs.
Right.
And because of this show, I am the most optimistic guy in the city. You see these people, a lot of young people coming in with these ideas, and I'm a big boy. I know some of these aren't going to make it, but
Right.
that just energizes me.
Yeah, yeah. Actually, back in about 2001, I came up with the idea for the digital media law, which
Yeah.
I actually spent about 4 years trying to push. It passed it. That's been a lot of the push for the it was patterned after the film industry in terms of the tax incentives, and so I'm real pleased that that's begun to really take off. So I'm going to push some buttons, if you don't mind, so we can take off this program, and just bear with me. Thank you so very much, and I'm going to push this button and push one other button.